Hello, and thank you for lending your ears to Ratehub.ca's Real Money Talk podcast. In this show, we give you the real talk on all things money. We eliminate the fine print, we junk the jargon, and we explain how you can make smarter financial decisions. We're not millionaires, we're thousandaires, and we know you are too, so this show is for you. We want to talk about money because it affects everyone, rich and poor. Money shouldn't only be the occupation of the 1%, but rather the 99%. Avocado toast ain't the reason you're broke. Don't hold out lattes for paydays. Let's make money an everyday discussion.
Thank you for tuning into the Real Money Talk podcast, your favorite Canadian personal finance podcast brought to you by Ratehub.ca. Ratehub.ca is the best place to find a great mortgage rate, compare insurance quotes, discover your best credit card, and to learn about your personal finance in Canada. We're here to help you choose better. I'll be your host today. My name is Matt Hands, Director of Insurance at Ratehub.ca, and with me on today's show is a budding legend in the Canadian personal finance space, Jessica Moorhouse. Welcome to the show, Jessica.
Thanks for having me.
Well, thank you for appearing. Jessica is an award-winning blogger over at jessicamoorhouse.com and founder of More Money Media Inc. She is the host of the More Money podcast and an accredited financial counselor in Canada. But her road to success wasn't immediately clear. She didn't get an allowance growing up. She went to school for film, graduating with that dreadful student debt that we all carry on. But then she went and found a job that could help her pay her bills. She figured out how to be frugal, how to budget, and started blogging about it. She took all her personal finance experience and packaged that together with her skills from school and started up a YouTube channel and a podcast. Now she's a millennial money expert and influencer using her knowledge to help Canadians with their own money dilemmas. Jessica is an award-winning blogger over at jessicamoorhouse.com and founder of More Money Media Inc. She is the host of the More Money podcast and an accredited financial counselor in Canada. Her story is as unique as your own. Everyone faces their own personal finance obstacles. Her latest story is about buying a house in this extremely competitive landscape. And we brought her on the show today to share her experience of buying in the Toronto market. Personally, I recently bought a house, but I made the personal decision to leave Toronto for London because I was able to find a house that better suited my needs and my budget. We'll compare the two unique buying experiences for you today and shed some light on how to navigate the current marketplace, as well as discussing some of the challenges and hurdles you may encounter. We'll talk about our unique home buying journeys, how to find the best mortgage rates, and how to determine how much of a house you can afford. But first, let's talk about the money mistake or makeup. So whether you're a long-time listener or a first-timer, we always kick things off with a money mistake or makeup. It's important to know even money influencers can make mistakes or makeups with their finances. But I'll go first. Give Jessica a moment to kind of think of one. So my money mistake this time, I got to think of something a little bit different. I think I'm going to go with this one. I have this habit on vacation of impulse buying. I feel like I need to bring home some sort of memorabilia, something from that trip that's going to really make me think back and remember. But unfortunately, it's usually a hat or a hoodie. And that Hawaiian printed hat may look cool in the gift shop, but when it gets home, it generally just sits on my shelf, gathering dust mites. So, impulse buying clothing on trips is probably where a lot of my money goes. That really isn't the most, positive investment, I should say.
Fair enough. I can't say that I've ever bought. I'm like one of those people when I'm on vacation, I rarely buy anything usually because I just don't have any room in my suitcase.
That's fair.
But right, that's actually one way to prevent yourself from buying stuff that you don't need. Just pack your suitcase full. When I think about, going back, what I wish I could do differently or some kind of mistakes with my money. Well, first, I always say, and this is probably why you have the part of this, that mistakes are learning lessons, right? Like when you acknowledge them, then you're like, okay, not going to do that again. But I'd say that the biggest mistake, and this is a bit of a bigger kind of one, is I wish that I actually took the initiative more and learned more about investing earlier on in my 20s, because that was something that I always thought it was really intimidating and scary and too complex for me. So I avoided the subject for years and years and years and really just focused on like budgeting and frugality and stuff like that. And looking back now that I know so much more and I actually teach people about investing, I'm like, I really wish I didn't, have those kind of thoughts about investing, think that it wasn't something for me and, kind of left money on the table. I could have been a lot more richer and probably, had a smaller mortgage right now. I'd taken advantage of some of that. So that's one thing I always kind of tell people is like, start before you're ready and do things that scare you, especially like learning new things, and for me, it was investing. It was a very scary thing to learn at the start of it.
I feel that. I feel that to this day. I never know if I'm making the right decisions.
You know what? I still kind of feel like that. I don't think that
Yeah.
feeling ever goes away.
Yeah.
It gets better though.
I know, and then all the things during the pandemic, I got a little apprehensive. I didn't, the market was going up and
Yeah.
down, and then you look back, it's like, oh, I should have kept my money there because it rebounds, and it's just you get scared off. You see those losses.
The emotions of it all, like people just don't think about, oh, how intense the feeling is when things are really up. Everyone feels like they're a genius and super confident. When things are down, the feeling of just like, oh my gosh, did I just ruin everything? Did I just make the biggest mistake of my life? It's a roller coaster. But yeah, really the best advice I've ever been given, and reading books and stuff, is the best thing you can do is absolutely nothing. So just don't do anything if you feel really emotional.
I'm trying to do that right now. I have a stock
Yeah.
that's not performing very well, and part of me is like, oh, I should sell, just to cut my losses. But now I'm just like, you know what? I'm not even gonna look at it. It's like a book on a shelf. I'll
There you
pick it up
go.
in a couple of years
Honestly,
from now.
just keep it for 3 to 5 years, see how it
Yeah,
goes, you know?
yeah,
And just be patient. Patience is such a virtue that I think, us, like, millennials forget about, like, that it's because everything is so, like, go, 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 instant, FOMO, all that stuff. It's like patience is actually a great thing.
exactly. And if we're young enough that we don't have to worry about tapping into our retirement or our investments anytime
Mhm.
soon. So why am I
Why are you
fretting
panicking?
over
Yeah.
unrealized gains anyways,
Mhm.
right? So yeah,
Exactly,
I keep trying to tell myself that. easier
Quit.
easier said than done.
Exactly. It's a
Yeah.
daily ritual of, like, don't panic.
100%, 100%. I will say my time at Ratehub has definitely made that conversation and those thoughts a lot easier.
Oh, good.
Pre-Ratehub, I was very green and very naive. So
Mhm.
yeah, just being exposed to this chatter and this lifestyle
Absolutely.
is definitely important. And obviously, I don't take it for granted, but I understand that the general public, why they listen to a podcast like this, doesn't have that opportunity. So hopefully, we can, pass that knowledge on to them.
Exactly. Exactly.
Now, similar to the stock market, the home market has been a crazy investment, and it's been a whirlwind. And everyone's saying, like, should I jump in? It's almost like double dutch. It's like the
Yeah.
market's high, it's going to come down. Is it? I
Is
don't
it? I
know.
don't know.
I finally caved and jumped in. I know you said you've been in it before, and you recently reinvested in the market. So,
Mhm.
buying a house is kind of like we've been preconditioned to this. Like we're supposed to do it,
Yeah. Yeah.
whether or not that's true, correct. And you know what? I almost like to break that. Not buying a house isn't a bad thing. It's not for
Mhm.
everyone, especially in
Mhm.
today's climate.
Yeah.
But as we start to normalize that idea in that conversation, let's have a just generic conversation. Why do people buy homes? Why did you decide to buy your first house? And
Mhm.
then, furthermore, why did you choose to reinvest?
Yeah. So let's start with, like, why do people in general buy homes? And I think really the thing that I hear so often from people is it feels like they should. Right? That is the lesson we've all learned from our parents and our grandparents because they've done really well from investing in real estate. And so we're like, well, I guess I should continue the pattern because history shows that it's a very good investment long term. Here's the thing though, even with we could talk about real estate or the stock market. People will always talk about the upside and talk about the gains, but they will rarely talk about the downsides and the losses. And there are for real potential losses because I sometimes I forget I'm a bit of in a bubble. I live in Toronto now, but I'm originally from Vancouver. Those are two of the hottest real estate markets, and they have been for, over a decade. And so that's kind of my view, but I know there's other people in other provinces and small towns. It's not the same, so it may not actually be a wise investment to buy a house because there are real estate markets where they are, the values of those homes have actually decreased. So it's really important to know what market are you talking about. But yeah, I think in general it's just this feeling of I'm not a true adult or a successful adult if I don't buy real estate because everyone's talking about real estate, real estate, real estate. And to be fair, I felt that is, I think, one of the catalysts that, kind of triggered me and my husband to buy our first home. We bought a townhouse in Toronto when 5 years, or about 5.5 years ago now. And I just turned 30. And, you turn 30 and then you kind of have a bit of a life crisis. And you're like, oh my gosh, what are we doing with life? And so one of the things that we did was we bought a place. To be fair, we were kind of probably going to look for a place during that year anyway because we were looking for a place to buy a few years prior in Toronto just because at that time housing prices had not really gone crazy compared to Vancouver. It's like, oh my gosh, like you can get a house here for like $500,000. That's insane. You can't find anything below, like really like below maybe $800,000 or $900,000 in Vancouver at the time. And so we thought, okay, but we hit pause on that because things started going crazy. This is going back to, gosh, maybe 2015. And so, back to like, it was like 2016, summer of 2016, we started looking for a townhouse. And so one kind of thing I will say is, we have this idea that we need to buy a house. We need to buy land. I like even telling my parents that like we finally bought a house. It's like, good, you got some land. It's like, okay, we're not going to be like working the land. We don't have a farm here. Like it doesn't really, it doesn't really matter. But originally we couldn't afford land. We could not afford a house with our salaries, and so we adjusted our expectations and played with the numbers so we could still enjoy living in the city of Toronto and not be house poor, not have everything going into our mortgage and our housing costs. And so we bought a smaller place, just bought a stacked townhouse, and it was a great starter place for 5 years. And so that's one thing I always tell people is, during this crazy market, you're looking at all these crazy prices for houses. You don't have to buy a house. If you want to get into real estate, you can buy something smaller. You can buy a 1 or 2 bedroom condo, and that could be your starter place. You're building some equity. You're getting used to being a homeowner and all the things that come into play. And then maybe in the future, as your hopefully incomes have increased, then maybe you have more flexibility, financial wise, and can buy a home. Or
Mhm.
who knows where you're going to be in 5 years? I mean, we were very close to not buying in Toronto. We were very close to buying in like Prince Edward County. I mean, if it was up to me, that's where we would be. But my husband really wanted to stay in the city, but that's okay. And so you don't know what you're going to want in 5 years, or, maybe you'll stay a little bit longer. So it's good just to like, maybe start with something that's practical. And then, when you feel like, okay, we've kind of outgrown this place or it doesn't fit our lifestyle anymore, reassess what makes sense for you. But I feel like that's the overwhelming feeling I hear from everybody is this: I need to buy a house and I need to buy in Toronto because long term it's going to be a good investment. There's other ways to buy real estate and to still make a good investment. Again, like we bought a townhouse, which had, maintenance fees and, a strata and all that kind of stuff. And yeah, it was still a good investment after 5 years. Again, a lot of it, and I always tell people, I'm not some genius that bought real estate at the right time. It
Yeah.
was very much luck. It was very much luck. But one of the things that I hear often, like you kind of touched on, is will there be a housing bubble, burst? Will it crash? Should I wait for that? And I say the same thing as waiting to get into the stock market. Don't ever wait for a crash because you may be waiting a very long time, and no one knows when that's going to happen. And even when it happens, will you actually be ready to buy? I mean, going back to just March 2020 when the stock market did crash, so many people thought they were going to rush in and start buying all these stocks on sale. You know how difficult it is emotionally and psychologically to buy things that are going down in value, and you buy and then it still goes down in value and you feel like an idiot. It's very difficult to actually do that. So for me, it's always about not timing the market, time in the market. But again, when it comes to real estate, especially because it is a very expensive purchase, you really need to play with the numbers and work with a mortgage professional who knows what they're doing so they can make those calculations for you so you can buy something that you can afford and just start slowly. You don't have to buy a house right away.
That's the key point, I think, right there is the affordability is not
Mhm.
overextending yourself. What's the point in owning a home if you can't afford to do anything? If you can't go out and see your friends,
Yeah.
you can't afford to have. You're just house poor.
Yeah,
Um,
absolutely.
you'd feel like a student all over again. Back, I just remember like being barely able to pay my bills when I was in college.
Yeah, that's not
And feeling
fun.
I
You don't
couldn't do
want to do that in
anything.
your 30s, really. It's not fun to
No,
do in your 30s. And I think that's, the other kind of sentiments I've seen. And also, Alterna Savings did a survey recently that really kind of hit on a lot of points that I think a lot of millennials can identify with. Is just like the fear and anxiety of making a mistake, and just not having enough. Like there's, some stats that they pulled from their survey that especially in Toronto specifically, respondents said that they feel like the scariest part of kind of the home ownership and mortgage process was just like saving up enough, because that is kind of a goalpost that keeps on moving. I mean, just
yeah,
looking at October 2021 to 2020, I believe housing prices in Toronto specifically went up 25%. And so unless you were, I guess, investing your down payment 100% in equities, you wouldn't be able to keep up with the cost going up substantially. And so it feels like you're never going to have enough. And I think that's like the other thing. Like again, I think that the big thing here is just talking about the emotions and recognizing them, but then also kind of putting that to the side and trying to do the best you can in terms of making a rational decision.
for sure. I'll be curious to get your perspective on this. I feel like even though we've been preconditioned, I feel like a lot of us also want to get in the housing market because that's how a lot of our families have made their money.
Hmm.
Like they bought low, the market took off, they reinvested, maybe they bought multiple properties, and every single time they made money.
Yeah.
Will the market continue to play out like that? Who knows? It's
Who
hard.
knows?
It's hard to
Hmm.
expect. It's definitely obviously like you've already touched on. It's definitely harder to get in now than when our parents did. But if you do decide to continue to rent, what would you say is the biggest things you're missing out by not being a homeowner?
Well, I guess like the biggest one is like you're not building equity yet. That rent money is not going into, an asset that you can eventually, utilize yourself in the future. It's going into your landlord's pocket and then most likely paying their mortgage. I honestly, personally too, and again, this depends on where you live. The place that we were able to buy. And now it's because we did put over 20% down when we bought this place 5 years ago, the townhouse, our original place. That place was substantially nicer than any rental we've ever lived in a pretty okay area of the city. Like it's grown actually substantially since we bought in there, and it's a lot more restaurants and stuff like that. Before there was kind of nothing going on. But it was in terms of cost, like just like mortgage to rent, our mortgage was a little bit more than our rent. But like our cost of living didn't increase substantially. And so for us, it was actually like an improvement in our kind of lifestyle and just comfort level and stuff like that. So I say those are kind of like um, two things. But honestly, when I do have these conversations about rent versus buy, there's so many things that I think you're giving up when you're buying as well, and that maybe don't get enough attention. I mean, I love being a homeowner. That's why I bought another place, but there's so many things that you have to really take into consideration. Like you were pretty much saying, okay, we're living here for like honestly, you should if you buy a place, you should stay there for at least 5 years. Otherwise, there's a higher chance that you will lose money on that purchase. And so you're really, being like, we can't move. If you have a job opportunity in a different city or province, you're kind of stuck. Now we're in a kind of a situation where there's a little bit more flexibility with working from home, but still even for me, I run my own business. I work from home. It's actually really important for me to stay in Toronto, though, because pretty much
Yeah.
all of my business comes from Toronto. And even if we don't see each other in the flesh, it's important that they know that I'm in Toronto. So there's lots of things to kind of consider there. I could probably go on and on about the pros and cons of renting and home ownership, but I think ultimately it's a personal decision.
Yep.
And it's one of those things that you have to make sure it is something that you want to do. So like we kind of, talked about, so many people have their opinions, especially that's kind of largely why we want to buy our homes, because it's what our parent, expectations of society and our parents and stuff like that. But it's your money and it's your future, and you have to do what's right for you.
No, that makes complete sense to me. Um, it's not an easy decision. I know from experience. I could have talked about my money mistake. I had a property that I almost bought, and then I talked myself out of it. And I'm the worst at like talking to myself in circles, to like,
Mm-hmm.
tie myself in knots. And yeah, it definitely skyrocketed up. And I look back and I'm like, wow, I could have bought this property for X%
Yeah.
below what it's currently worth now. I'm like, what an idiot. But you have
But
to feel
maybe it
comfortable.
wasn't the right place for you, because otherwise why would you not have bought it? Like I have a
100%.
very
Yeah.
similar situation. This was, I think, going back to maybe 2014 or 2015. We looked at some houses, and they're mainly in like the East End. And they were all, this was when, everything was going for starting to go over asking.
Yeah.
Now that's just the norm. But before it really wasn't. So people were like, what's going on? Why are all these bidding wars? What's going on? And it was listed for about like 500,000. It was just like a bungalow, but it had like a basement. It was, perfect, great starter home. And we put in our bid. Of course, we were in our 20s, and so we could not. We were at the bottom of the bidding, and it sold for something like 600 or 620,000. And we're like, that is outrageous.
Yeah.
That place is 100% worth $1.2 million right now. So that's one of those things. We're like, well, maybe if we just figured out how to get some extra money, we could have bought a house and seen it skyrocket. But also, there's so many things that happened in between that I'm like, you know what? I'm glad we didn't buy that place, because, we would have felt maybe like at that time I was still working my corporate 9 to 5. Maybe I wouldn't have felt comfortable leaving that job because I'd have a very expensive mortgage. So there's so many things that come into play. But again, like that's, why I say it's so important for you to feel good about a purchase. Like there's so many
Yeah.
places that we bid on that we did not get this time around. Glad I didn't get any of them because they were not the right fit. The house that we got this time, although it was more expensive than I predicted they were going to spend, it, we still, it wasn't our affordability. But I'm glad that we bought it because
Yeah.
it ticks all of these other boxes that, we kind of didn't really think about.
No, that makes complete sense, and that really kicks off my next question is, and it sounds like both of us were facing the same thing. We wanted to get too sure how much we wanted to spend. We realized the
Mhm.
prices maybe weren't in our range. So, how do you properly save for a house though? Like, because that really
Yeah.
kickstarted my journey. I started thinking like, okay, if I
Yeah.
actually want to do this, I need to start putting money aside. I need to start putting a longer term vision on this, and maybe in a couple of years, I'll be ready to enter the market.
Yeah, I think so much has changed in the past 10 years. I mean, the old advice was, just put it in a, GIC or a savings account because I think the expectation was that you would be able to save a down payment in like 1 to 2 years. Now it's looking like, gosh, some people are saving for 10 years. Um, so with that, it doesn't, especially right now in this environment with low interest rates and high inflation, does not make sense to keep it in cash. I think the best thing that you could do is, well, first, before you start saving, whatever kind of savings goal you ever have, and that could be like a trip or retirement or whatever, you need to find out how much you actually need to save. And I think most people don't actually know, like, because there's a big difference between having a $50,000 down payment or 100,000 or 300,000 down payment. So that's really a really important thing to do. And so, even before you start investing, or not investing, but sort of actually before you start saving for a down payment, it's important to actually talk to someone, mortgage professional, to actually talk about what, if we want to start now saving for a place, maybe not even until 5 years happens, how much do we, realistically need to put down on a regular basis to get to a substantial amount. And then you can also talk about the pros and cons of putting down 20% or over or under 20% because you're going to get a very different mortgage. You're going to get either a high ratio mortgage or conventional mortgage. High ratio mortgage, you're obviously going to have to pay mortgage insurance. And that's the other thing too. The advice was always you need to put 20% down, otherwise you're a chump for paying that mortgage insurance. But then there's the opportunity cost of then you're waiting potentially years and years and years to get into the real estate market when you put less down. You can get into, the real estate market so much sooner. And that's something that I used to be like, oh no, it's like there's so many things that I've changed my mind on in the past several years being a homeowner. Like if I could do things differently, maybe I wouldn't have put so much pressure on us for having that 20% down stuff. So I think talking to, a mortgage professional about your options and just they may bring up some things you never thought about. And then you can start figuring out, okay, how much do we need to contribute to our, maybe investments to get to that, number and say, 5 years, what's the timeline? And then also, yeah, figuring out how are we actually going to pay for it? Are we going to invest through our TFSA? Are we going to withdraw from our RSP and take advantage of the first time home buyers plan? What are we going to do? And that, I think, answering all of those really critical questions is a great starting point. But I would say don't just keep it in cash, invest it.
Oh, I 100% agree on that point. Yeah, yeah. You're not going to get much out of there, other than
Yeah.
you're guaranteed not to lose it. But I mean, you're
Yeah.
really 5 years if you're planning a long time. You're losing out on a lot of interest.
Yeah.
Even a basic savings account would be better than nothing.
Hmm.
Um,
Hmm.
did you tap into the home buyer's credit for your first purchase?
We didn't actually.
Okay.
That's something that, luckily we didn't have to tap into. Not that I really had that much in my RSP anyway. But yeah, looking back, I'm like, I think it actually, like, I think it sometimes gets a lot of flack
Yeah.
because, especially from, maybe the older generations, because they see that there's again that opportunity cost of if you left that money invested, it would have grown to so much for your retirement. But again, it's in order to afford a home these days, you've got to look at all options, and I still think it's a pretty good option for most people to take advantage of. But I think what most people don't realize is the actual the setup of the program. I think a lot of
Yeah.
people think that you can just take money from your RSP and you're good. It's like no, you have to. You're basically taking a loan out from yourself, so you have to
Yeah.
pay it back. So you do have to make those calculations. Be like, can we actually afford to make those repayments back?
For sure. And like personally, I did take it out. I used it, the 35 grand
Hmm.
max, which I was happy they increased it,
Yeah,
because
yeah,
otherwise I was going to be scrambling for a down payment. Um, but no, you're right. Yeah, I've already looked at it. I have kind of mapped it in my head how I have to pay it back over the 15-year period I have
hmm,
to repay it. So
yeah,
um, definitely a great program. I appreciate it, that they
yeah.
increased the amount over the time. But I think there's still more things that they can do to help, and I think they've been talking about it more recently about how they can
Mhm.
make home ownership easier for first time buyers.
Yeah. I mean, I feel like that's such a huge conversation. I feel like a
It's
lot needs to be done, less about how can we help first time home buyers save more by creating some other kind of, it seems like the program that was kind of pitched during the last election was like similar to a TFSA, but for first time home buyers. And it's like, that's really not the problem. The problem
Yeah.
is affordability
It's
and
100%
prices
affordability.
going up 25%. Like that's the
Exactly.
problem. So I think, but hey, I mean, any kind of, tax advantage, account that could help first time home buyers, I'm all for. I won't say no to that, but there's some bigger political things that need to happen for this to, because it is outrageous. Like I remember, 10 years ago being like, housing is so crazy expensive. And it's just somehow continued to go crazier and crazier. So I understand, especially talking to, younger millennials or people in their 20s, and they feel, I'm like, I felt the exact same way at your age. And it's unfortunate that I don't really have better news.
Yeah, and it's getting tougher every day.
Hmm.
I mean, like we said it earlier, that it's something you just have to dive in when you're ready, because it's not gonna.
Absolutely.
It may get easier down the line. It
Hmm.
may not, but you can't plan for that, and
Yeah.
it's really hard to see. Um, but you did touch on something else earlier that I wanted to bring back. You were kind of talking about the fixed versus variable rates,
Yeah.
which I think has been like a big discussion. I know it was hard for me to kind of
Yeah.
determine,
Yeah.
and it even goes into play with the down payment. You even talked about that as well, because if you don't, there were benefits if you don't pay a down
Mhm.
payment. Or at least, or sorry, from my perspective, they told me that if I went under 20%, I would get a much lower rate.
Really?
It was like
That's not normal.
the
Usually
low,
you get a higher interest rate if it's a high
but I
ratio
would have to pay.
mortgage because
Yeah,
you're
I
because
would have to
you're
pay.
you're more of a risk.
I would have to pay the mortgage insurance, but I
Yeah.
would have got a lower interest rate, but it would have been a variable rate, which
Right. Okay.
which was kind of, you don't know in the market, but the market's so
Right.
low right now. It
Right.
was the lowest rate in Canada at the time. Personally, I was like, you know what? I decided to go with the 20% because I just didn't want to have to worry about
Yeah.
the interest.
Yeah.
But I did go with the variable rate, so I
Mhm.
am playing the market there. But
Mhm.
what is your perspective on, if you want
Yeah.
to touch a little bit more on the 20 versus 10, because you kind of just highlighted on a bit, and then
Yeah.
also like the fixed versus variable.
Yeah, so I think that really important thing to know is, so we've got the high ratio mortgage, so that's if you're putting less than 20% down, and conventional mortgage if you're putting 20% down or
Hmm.
more. And a high ratio mortgage, as it kind of sounds, is there you have a higher mortgage. You're only putting, most people just put 5 or 10% down, and you are, as a borrower, a higher risk than someone who's putting 20% down because you have less money, and so that you're more likely to maybe default on your mortgage. And so typically, the interest rates that you will get will be a bit higher because you are higher risk. Even if you have like an amazing credit score and credit history and stuff like that, typically you will get a better rate if you're putting more down because you're less of a risk. So that's if you can afford to put 20% or more down. And again, that just means that you're going to have less debt to pay. You're going to be paying less interest over all of those years. You're going to save money in the long run. So I always think if you
Hmm.
can do that, do that. But if it is not possible, then then maybe taking a look at a high ratio mortgage, putting what you can afford down, just getting into the market as soon as possible. And then you can kind of make up for some of that gap. If you, get a raise or switch jobs and you have a higher salary, then you can maybe do, some extra payments onto your mortgage to kind of make up that gap.
Did you have a preference when you went and got your mortgage between variable versus a fixed rate, though?
Yeah. So again, like that's a really personal decision because so many people have their opinions. And so for me, on our first mortgage, I got a fixed rate. And that was really because at the time, being a first time home buyer, it scared me, getting
Yeah.
into the market and the idea of mortgage rates going up. And people were talking about, they're going up, and they did go up. Because this was like going back to 2016, 2017 when they were quite low. And so I wanted to lock into what I thought would be a really good low rate. And, if interest rates went up, then I wouldn't be phased. And looking back, I don't regret it because it gave me peace of mind. And so for me, that was something that I really valued. And again, that's another reason why I always talk about, talk to a mortgage professional so you can really outline what's important to you. Because if you just look online on like forums and stuff, people are going to share their opinions, but they may not
Yeah.
actually mean anything to you. You need to figure out what is going to make you feel safe, secure, confident about your decision, because the worst thing is feeling regret. You're like, why did I take that person's advice online or something like that? You need to make sure, what are your personal values? And so at the time, my personal value was, safety, just having that peace of mind that we were locked in for this rate for 5 years and I'd be
Yeah.
happy. This time around, we have different values. So I have a little bit more clarity about just how things work, since we've owned a place for a little while. And, so we talked to our mortgage professional, and we looked at both scenarios. If we locked into a fixed rate versus a variable. And like you kind of touched on, if you get a variable rate, typically you're going to get a much significantly lower rate. But that
Yeah.
is, again, because you are kind of throwing the dice, hoping that they will not go up, but they might, and they definitely will. Government has talked about, the Bank of Canada raising its key interest rate. It's not going to be all of a sudden. It's going to be very gradual, about 2.5, or yeah, 0.25 each quarter. I think starting in April. Again, we'll see what happens. We just never know what's going to happen. But
Yeah.
I got into a variable rate with a 5-year term this time because even though I knew rates were going to go up, the rate for the variable was significantly lower than the fixed. And even if rates did increase, we would actually save a little bit more money that way. And so because I understood just the pros and cons of both and had the experience of both now, that's what made the most sense for me.
And I did the exact same thing. I looked at the math. I calculated it out. I
Mhm.
just figured the additional money I could save in the short term, even if it went up, if I took
Yeah.
that money and I put it into an investment, I was going to make more than on a fixed payment. So
Yeah.
it was a hard decision. I went back and forth. But I definitely leaned in on that mortgage professional, and I asked him a
Yeah.
lot of what seemed like dumb questions to me, but they thought
Mhm.
every question was perfect, and they appreciate you asking every
Yeah.
question.
I want to just make sure we touch on, because a lot of people just think the home ownership process is like getting a realtor, getting a mortgage, and just like, like
Yeah.
it's just like so fast. But the best thing you could do is taking your time, pre-planning, and finding the right person for your team. Because that's really what it does feel like. You're making this huge purchase, and you're hiring people, your real estate lawyer, your realtor, your mortgage professional on your team, and you want to make sure that they are a good fit. I
Yeah.
will say I have fired people that were not a good fit. You need to interview these people. But one other thing that I always hear, because I think some people just again rush into like, oh yeah, I just got a mortgage with the place that I do my day to day banking. You really want to take a look at your options. So there's lots of different professionals. There's agents, there's advisors, there's brokers, and take a look at like alternative lenders. And what I mean by that is, there's the big banks, of course, but there's also credit unions. So Alterna Savings is like one example of a credit union. And I've always found when I've ever worked with a credit union, like as a customer, I've always gotten really great personal, like one-to-one, like they care more about their customers, quite honestly, because as a credit union, they don't have to answer to shareholders, they answer to their customers. And
Yep.
so I feel like it's so important when you're deciding where should we go to look for a mortgage, to take a look at all of your options and don't just default to mom and dad's place and their guy, or the place that you do your day-to-day banking. I have never had a mortgage with any of the financial institutions that I've done my day-to-day banking with. And I'm glad, because I've actually gotten better service, better rates, and stuff like that. So I would highly recommend being open to that and exploring, because most people do not even know that it's an option to get, say, a mortgage with a credit union, or go someplace outside of their bank. I think there's a myth out there that you're going to get the best rate if you stick with your home bank. That's not true. That's not
100% not
true.
true.
So
Yeah.
shop around and take a look at that. But then again, when you want to work with that, mortgage professional, interview them, make sure that they're on your page, because because it's not just like the service you get while you're getting that mortgage. You also will have like that time of you're renewing your mortgage term, but also throughout the years. Like I've, hit up my mortgage professional so many times, just asked it like dumb questions, or just like, hey, what do you think about this? And
Yeah.
you want to make sure that they're, responsive and actually want to help you, so you feel more, again, confident about your decision. And then we'll, hopefully work with them in the future because you got good service.
Well, that makes sense. So when you were doing your research, was it like just manual? Like you're like, I'm just gonna start typing in rates online, just start checking out different credit unions, or did you
Yeah.
kind of have more of
Yeah.
an idea of what you wanted to do? Did you have like an attack plan almost?
Well, yeah, that's a good thing. So I think it's always a good idea to do some research online just to get a good kind of idea of average rates? Like what are we talking about? Because I think if
Yeah.
you're out of the loop, then you have no clue what a good or average mortgage rate is. But then taking a look at, you can either go to obviously the individual institutions and talk to them and see what they can offer you. And that's one way to do it. But again, looking at kind of their posted rates is a good place to start. Always, it is still a good idea to get personal recommendations from people who recently bought a place and make sure that they had a good experience, because that's always something that you want to be able to take advantage of. But for lots of the things that I've done in like my personal finances, in terms of like finding like a insurance agent or something like that, a lot of it starts with like online, but then also asking for personal recommendations and then interviewing all the different options and seeing what's a good option for me.
Yeah, the interviewing part is key, I think, because I think a
It
lot of
is.
people think that if they call in, they're pot committed, or they're too far in the decision, like, or they're wasting this
Mhm.
person's time. But no,
Mhm.
it's you don't have to worry about that. The people are there to serve you. That's their job.
Exactly. Yeah,
They
you're
want
not
you asking
bugging them.
questions.
Like that's the
Yeah,
most Canadian thing ever. It's like, oh, I don't want to bug them. No, no, no. You need to bug them. They're actually
yeah.
you're hiring them, really. I mean, just like a personal example. Me and my husband have to obviously get home insurance, so we don't get the keys to our place for a few weeks now, and so
Okay.
we're preparing to get some home insurance and shopping around, looking at online, getting personal recommendations, and called around to get a bunch of different quotes from places, and we did actually contact this one institution. It's a pretty big institution, and it had good reviews online and stuff like that. And just talking to the rep, it was like a weird experience. Like I've talked to a couple other people, and so I have kind of a something to compare it to. But it's at the end of the call, and it was a long, lengthy call, and getting all of her information. Then I asked, like, great, can you email me the quote for this home insurance? They're like, oh no, I hope you're taking notes because we can't email quotes. I'm like, what?
That's not.
who, who says that?
That's not true at all. I can tell you that
I
for
know.
sure.
I'm like, that isn't true, because I've talked to other people. I've gotten emailed quotes, because you want to have some kind of
Yeah,
proof of what you discussed on the phone. I don't have a recording of this phone call. You do.
hundred
And
percent.
so that I'm like, well, I don't want to go with this, institution if this is an example of their customer service. So that's just like one thing.
Yeah,
It's like, listen to your intuition. And if you're getting a bad vibe, or you're like, this is weird, then maybe it's weird and move on. Don't try to make it work.
100. I agree. Yeah, sometimes just because like you think you're getting the best rate, but you don't feel comfortable with the people giving it to
Yeah.
you, that then it's not always. It's the best situation. What I say to
Yeah.
people, it's the best rate for you, not the best rate in market. It's
Exactly.
we're on the same page. Yes, it's not wasting people's times. It's asking questions, and
Mhm.
yes, if you have an experience like Jessica where they won't give you a rate, you
It's weird.
just walk away.
You're
Just
like,
walk
"That's not
away.
true. You're lying to me. I know more than you. You do
Just walk
email
away.
rate." Yeah,
Yeah, that's just
walk away.
that sounds like someone who didn't want to get caught, lying or something like that.
Well,
Maybe they were
that's
like,
the thing. It's like, what if
yeah,
I called back and, like, remembered the quote that you gave me, and they'd be like, "Oh, we don't have," like, they could very easily say, "We don't have evidence of that," and I wouldn't have evidence of that. So,
exactly. And they'd be like, oh, and now it's this rate. And you'd be like, I thought it was
wait a
$20
minute.
cheaper last time.
Exactly. Exactly.
So, beyond searching for rates and beyond finding the best mortgage broker, which obviously are keys to the initial part of your journey, when you're budgeting, there's a few other things to consider that I don't think
Mm,
people, think about. Ththese little hidden costs that,
yes.
that caught me almost by surprise a little bit.
Mhm.
So,
Mhm.
can you help us dive in a little bit more on some of those
Mhm.
hidden fees that people might not realize are part
Yeah.
of the home buying journey?
Well, I will say honestly, for buying my first place and then this place, I did actually utilize Ratehub's resources quite a bit. I love you guys' mortgage calculators. Been using them for years.
Yeah,
So you got some great information about closing costs there. As a first time home buyer, you're so lucky because you do not have to pay realtor fees. That is something that you do when you sell, and so that is a huge savings. Like I do not even want to say how much we paid in realtor fees. It is embarrassing. But then I also think about the place that we're buying and how much their realtor fees were. So it's like, oh, it could be
jeez.
worse, I guess, right? But so that's one thing that you don't have to worry about. But that is something that you do have to calculate. If you own a place, you're going to sell it and then buy another place. That could be a good chunk of change. Basically, it's 5%. Typically, I mean, in Toronto, at least it is. I know I have a realtor friend in BC. He's like, that's outrageous. That's, it's a little bit less in BC. So again,
Jeez.
understand, what the market is, where you live and what the kind of costs for that. There's realtor fees. Those usually aren't that bad, maybe about $1,000, $1,500. Land transfer tax is another thing to consider if you are, again, moving to another place. Obviously, I like, Ratehub's calculator because they do kind of have some examples of them, but we made our own little spreadsheet.
Yeah.
So when we were kind of looking at different places and, if the price was very different, then obviously the closing costs would be very different. And so we had lots of different tabs on that spreadsheet just to keep things nice and organized. I think often you think about, oh my gosh, our home increased in value so much once we sell, we're going to have this amount of money. But then you need to make sure that you deduct this, and this. Because then it could be like, oh, wow, $90,000 in closing costs. How did that happen? So it's so important to really, take a look at what are the closing costs that you may have to pay.
Shameless plug here. I did the same thing. I used Ratehub's calculators. I used the rate comparison to find everything, and for me it worked out. But even still, like the hardest thing for me, and still wrapping my head around it, is the property taxes, especially because
Yeah.
in the pandemic right now. I don't know if it's the same. I'm assuming it's the same in Toronto. Are
Mhm.
they rating your property taxes on like 2016 values, or have they updated it? Because in London, it was
Um,
still 2016.
I actually don't know. I don't remember. I'm gonna have to take a look at that. I don't know.
Because
Probably,
that
probably 2016. Probably. I don't know.
because they were supposed to do it every 4 years, at least in London, and they
Mm,
didn't do it because it was the pandemic. And now it's like,
mm,
when are you going to do it? And then how bad am I going to see my property taxes increase?
that's
Which is
true.
is the hard thing to know, right? So that's the hard thing to budget
Mhm.
for. But now in my mind, I'm like, okay, I'm starting to like put almost like a slush fund aside, going like, if
Mhm.
I could get hit with a random property tax increase in the next couple of years,
Mhm.
that just it's just hard to know, right?
It is, and also depending on where you're moving. So, like property taxes, like even within Toronto, property taxes are so different. We actually had pretty high property taxes for our townhouse because of where it was situated in the city. And I think in this, place that we're moving to, which is more on the east, outskirts of the city, they're not like they're higher, maybe by
Yeah.
maybe $1,000, but like not like crazy. So it also depends on where in the city you're gonna live. And also even too, like one thing that we discovered was when we were looking at the home and, trying to bundle it with our car insurance is actually for the new address, like $200 cheaper than where we were living. I'm like, oh, that's another thing a nice
Yep.
little, hopefully bonus if you also discover something like that, like moving maybe a little bit outside of the city core could save you some money.
100%. When I moved to Toronto from London to
Mhm.
take the job at Ratehub originally, I saw my insurance like skyrocket, and
Yeah. Whew,
I was like, I'm driving less. I'm not even driving to work
I
anymore.
know.
But
I know.
just by living downtown, and now that I've moved back, touched on that a whole pandemic working remote, took
Hmm.
advantage of that.
Yeah.
Insurance is way back down. I'm loving it.
Yeah.
Yeah,
That's the other thing is when you're in the mindset of like, okay, we definitely want to move, really take a good think about in this kind of new world that we're living in. Do you have to live in the city? Like a lot of people, I mean, you look online and people just bash people that buy places in Toronto all day long. And I get it. I totally get it. It's ridiculous. But you do have to take a look at like what life do we want? And,
yeah,
honestly, if it was up to me, I'd live in the country. But for me and my husband's careers, we have very different careers. He works in music. His
yeah.
job is dependent on networking with people who are musicians who live in the city. So it's like, okay, maybe when we're, looking to the future in your 40s or something, we can look into that. But right now, this is kind of critical for my career, trajectory. So, but yeah, like you said, you probably got an amazing place for so much cheaper in London. So maybe it's, there's lots of other opportunities outside of the city that might be a good thing. And, again, more affordable. I mean, the places that we did kind of look at a few places, in like St. Catharines and Prince Edward County and what you can get for your money compared to like Toronto prices. You're
Oh
like,
yeah.
oh gosh, that
It,
sounds nice.
it, it, it feels like it goes a long way. Yeah, yeah. I was looking
Yeah.
at one bedroom condos in Toronto,
Yeah.
or maybe two bedroom max, and
Yeah.
then houses in London. I was like, I really want that space.
Yeah. Yeah. So what kind of
Yeah,
lifestyle, do you want and what is possible, and this is the kind of time we're in this kind of time where you can ask for more money or more flexibility with your employer. So take advantage of it. Cuz I
definitely.
never when I was working my, corporate career, there was no flexibility like that. I
Oh
remember they
yeah.
did have discussions about working from home, but it was for a select few, only for like one day a week. It is like, come on.
It
So
was it was a very taboo conversation for a long time.
mhm.
Like
Mhm.
businesses hated it, hated
Mhm.
people work from home. Didn't think people could be productive.
Yeah.
I mean, if they're like
It's
I've
like
been
there's
telling,
so many ways to now track productivity.
yeah, yeah. Well, if we could take any positives out of this unfortunate
Mhm.
situation we've been in, is that technology's gotten a lot further. We figured
Yeah.
out ways to work and adapt in other ways that
Mhm.
are going to set us up to be better going forward, just because our businesses have become more flexible.
Exactly, and different workers work differently. Like, I actually am more productive working from home, But I know some other people, like friends of mine, they're like, oh no, I actually love working in the office and more productive. So having that, I think, yes, all businesses should just like adapt to this new situation. And in my view, like, wouldn't this be great? Because then you'd have less office space you have to pay for. Wouldn't you be saving some money?
Yeah, we're having the same internal conversations, is trying to figure out how to best
Yeah.
execute. Now,
Yeah.
we may be stuck on what do you call it, a rent or fee
Yeah.
for the office for a
Yeah.
little bit.
Yeah.
But I mean, long term, I think flexibility is the way to go.
Yeah.
And you're 100% right. Right, like why pay for
Mhm.
extra office space if you don't need to?
Mhm.
But that's a whole other
It's
conversation.
a whole other conversation. Yeah, we got off track a little bit.
We briefly touched on it a little bit, but just in general, how do you feel like the Toronto housing market? Just because,
Mhm.
like, you kind of alluded to it, but like you said, you kind of got in some bidding wars. Like
Yeah.
that's becoming a common
Oh,
thing. So like, how do you
every single
navigate those?
house that we bid
Yeah,
on like
yeah.
7 or 8, and they were all bidding wars.
Like, how do you navigate that home buying journey and like all
Yeah.
the rejection you're technically getting because
Yeah.
you're like you put your heart and soul. You're like, oh, I'm gonna get this offer, and then
Yeah.
no, sorry, you got outbid by 50K, 100K. Like,
It's the most like excruciating, like, it's so emotional, and you don't realize the emotional toll it takes on you until
yeah,
you're in it. We also did something a little different because Toronto is such a hot market. Most people buy a new place and then they sell their place because it's very easy to sell your place because there's not a lot of inventory. For us, we actually did the opposite. We sold our place first and then started looking. And the reason for that was because at that time we weren't 100% settled whether we were going to buy a house in Toronto or somewhere else. So we were
hmm
open to that. We were also open to just renting. Honestly, a big reason why we left, and if people follow me on social media, they've heard the stories, is the neighbors. We have upstairs neighbors. We got new ones during the pandemic, and lovely people, but they, replaced their floors, and there's like no soundproofing. And so we can hear all the footsteps, and it was just getting too much. And so I'm
yeah,
like, we need to go. I can't. I work from home every day and I hear them every day. I go crazy. And
yeah.
so the biggest goal for us is like, we just need to leave. And then we'll decide, do we want to rent or do we, want to buy, or what do we want to do? And so that again, looking back, and it was also an emotional decision. Most people probably should. I wouldn't recommend it because then you're in this limbo of, what if we can't find a place to live, a place to buy within that gap of us having to move. And we took a good, I think, 2 months to find our place, and there still was a gap. So like I mentioned, we basically had to get out of our place end of November. We're in an Airbnb for 3 weeks, and now we're at my parents for the holidays, luckily. So rent free at my parents. And then
Nice.
we get the keys in January. And so we're kind of nomads for a little bit without a permanent address, which has its own fun things to navigate. So I wouldn't necessarily recommend it, but it made the most sense for us at the time. I was like, I'd say that would probably, going back to your first question about
The money mistake.
maybe that was the money.
When you started talking about that, I was like, that is a good topic. Like, you may have somebody come over and offer you a bully offer that just to buy your house, because people were doing that. They were just putting flyers and
tried.
notes in people's houses and just
And you know what? Like, I get it. You have to be really aggressive. And yeah, so going back to like the bidding war. So for us, we were like, I think we put our place on the market in September, and I think it hadn't really gone super hot because it kind of cooled down in
yeah,
the summer,
it did a little bit.
and then it just went crazy. And so
Yeah.
honestly, I almost think I'm like, if we had waited at a month, could we get more money? But whatever, just so we only got actually one offer for our place, but it was for the price that we wanted, so we were happy about that. But I swear, once we started looking for a place right after that, prices just skyrocketed.
Yeah.
And so it was more intense than we expected. But yeah, we bid on, I think, 7 or 8 places. There was always multiple offers. And it really wasn't until we got to our last place and basically put down more money, because we were like, okay, so this is the situation for the original price point that we wanted, our original budget. It's not going to happen. Or you're going to be buying something that you're going to be renovating forever, and that could be a money pit. And so it's difficult. But I'd say like the best thing, for us was, again, going back to having your team. We got a really good realtor. Unfortunately, we had our original realtor from our first place. We decided to not go with him, which was a whole situation. He was not pleased, obviously. But we had this other realtor who was a suggestion from a friend. We had a meeting with him. He just fit all of our boxes, was so attentive. He was just like a better fit for this kind of new purchase. And he was awesome in navigating just like what's going on. He was very familiar also with that specific area of East York. And so that was really important to us. We want someone who really knows that area, who, has lived there and stuff like that. direct with us about this is what's going to happen, and sometimes it means, putting up more money or changing your expectations for what you want. Maybe it doesn't make sense to stay in Toronto. So working with someone who really knows the ins and outs and has kind of skin in the game a little bit because they do maybe live in the city, then that's always helpful.
I mean, and I can say it extends beyond that. I had a similar experience in London. Now, I didn't actually put any bids in, but I would be navigating the market. I saw like 30, 40 places.
Mm-hmm.
I turned to my realtor. I'm like, what do they want? And he goes, okay. And then what are they getting? And he'd tell me, and I'd be like, and how are we going to make money on this? Because I'm like, I got to put 50, 60K in renovations in this to make this,
Yeah.
not look like it's from 1945. And he was transparent. He'd be like, no, I wouldn't bid on it. And then he would tell
Mm-hmm.
me the offers after and what it would go for. And a lot of times it was those crazy Toronto folk coming down and
I know. I'm sorry, but where else are we gonna go?
now
Right?
they were my favorite thing in Toronto people is the blind bidding, just buying houses without even sight unseen,
That's
like
that's crazy to me. Like, you've
sight
got to see the
unseen,
place. I mean,
sight
still though,
unseen.
we always saw the places, but still,
Yeah,
when you think about it, you go into a place to maybe have 10 minutes, and then you're
yeah,
bidding for this house.
100%.
But yeah, I'd say like that's the really critical thing too. Again, depending on what market you're in, if you're in a place like Vancouver or Toronto, where I'm not sure actually about Vancouver anymore, but in Toronto, everything is priced well below what the owner actually wants. So it's this
Yeah,
weird guessing game of like, well, how much do you want? And it's just like, I remember a realtor just talking to sometimes the other, the owner's realtor to be like, so what is the price? Like trying to figure out what are we talking about? $100,000 more or 200? Like, what are we doing here? Like,
yeah,
yeah,
exactly. Why?
that's like
Don't waste my time.
yeah, that was the biggest thing to navigate, is trying to figure out why are we doing this weird marketing thing where everything is, and it's just so frustrating. I miss the days where it's like the sale price was the price they wanted. Now you have to
Yeah.
figure it out on your own.
No, I completely agree. I that's why I chose just to go, and I did it. Like I got lucky, and I realized that I didn't want to have to renovate. I decided I
Yeah,
wanted to
yeah,
do, so I decided to go pre-build, and I got lucky. I found a place,
yeah.
and
Well, that's the yeah,
knock on
that's the
wood.
other thing. You've got to really figure out and create that list of what do you want. And so that's one thing me and my husband did, is we wrote out a list of all of the things that were like for high priority, and then kind of not as important, and then things that we don't really care about that maybe other people would. Like for
Yeah,
me, it really was about having enough space, because now we're both going to be working from home. He was renting a studio space, and now he's going to come inside, so that's going to save us some money as he doesn't have to pay for rent.
that's good.
But we needed to have space so we're not in each other's kind of way, and just really what was important for him, and I didn't think it would be possible because we were just kept on looking at semi-detached houses, was looking for a detached house so we can have our own walls, because I think no neighbors, and also he again, he mixes music,
Yeah,
and so it's loud, and so having that, I'm like, I don't think that's going to be possible, and we found one. I mean,
that's
it's probably the size of a semi-detached, but it's a detached house, and that's okay with
hey,
us. So you've got to write your kind of your list of non-negotiables. Like, we need this, because when you're in this environment of doing these bidding wars, and it feels like there's never going to be another house after you lose out on a house, you need to always have that kind of thing to go back to, be like, what are the things that we're still looking for? Because it's very easy to lose focus and to forget everything that you originally wanted.
yeah, and I have like a semi. No, I'm a townhouse, so it's attached on both sides, and I
Yeah,
can tell
yeah,
you that this is not my forever home.
yeah,
I
yeah,
love it, but I am not loving hearing people. It's not as bad as living in a condo building, which was
yeah,
challenging during the
yeah.
pandemic with everybody working from home.
Oh,
But
yeah.
I can definitely hear footsteps. and
And you know what? That's the thing. It's like, we don't know what's wrong with our house yet, because we're not
yeah,
there yet. But nothing is perfect. There's
there
always
there'll be
something.
something that will bug you. There'll always be. But I
Oh yeah.
mean, you
And
made the decision for the right choice, though.
yeah. And again,
Yeah,
it's I think this is a very millennial thing too. It's like, forever home. Gosh, no. Like, we're not going to live in
yeah,
this place forever. We're
yeah,
probably not going to live in that place for the length it'll take us to actually pay it off. We'll probably be out of there by then.
yeah, yeah,
So
yeah.
that's the other thing, is maybe rethinking this idea of the forever home. Because I mean, unless you really want to stay in the city, maybe raise a family and stuff, like me and my husband aren't going to have kids. And so it's like, why would we stay in this house forever? We'll probably be at a point both in our careers where we want to maybe move back to the West Coast, or my dream of moving to Costa Rica or something like
Oh,
that.
okay,
So it's important to also like have those ideas of, uh, you know, how long do we actually want to stay in this place?
makes sense. No, no, that completely makes sense. Is there anything else you want to touch on
Mm.
the housing market at all that we haven't really hit on? I feel like we've covered a lot of what people should be aware of.
Yeah, I'd say, and this is the thing that I hear often is that, people are like, what do you think is going to happen with prices? And again, I don't know. I thought they would go down after like November, after we
Hmm.
we bought our place, and they continued to go up. so,
Yeah.
so I think it's again, like I kind of mentioned in the beginning, is not about trying to time the market. It's about just getting into the market and staying in. It's just like any investment, like you bought a stock and it's gone down. You're like, oh gosh, that could happen to the real estate market. You can buy a house and maybe a year later it goes down. But as long as you can still afford your monthly mortgage payments and all of your bills, just wait for it to recover, because that's the thing. No matter what you're investing in, I mean, maybe not no matter what, but let's talk about
Yeah.
like the stock market, real estate. Those things do have dips, but they always go back up. So, but it's really the thing that you need to have is time. So make sure that you do have the time to wait out those, if there is a dip, which maybe it will happen, maybe it won't. I don't know.
Exactly. Because until you actually need to sell, they're unrealized gains or losses. So really,
Yeah.
they're numbers on a balance sheet.
It's the numbers on your net worth,
Yeah.
sheet, and it doesn't actually matter. So,
Yeah.
yeah. But I guess the other kind of, point that I'd like to make is this is one thing that, I'll look back like, oh, I could have bought a house in 2014 or 2015, and I'm glad I didn't. So it's really important to buy something like you for yourself. You probably could have bought a house, but you decided for a townhouse, and it's not your forever place. But I'm sure you're comfortable because you're like, great, I still have money to do other things that are important to me in life, not just putting everything into the house. So don't, if you can, put all of your eggs in that basket. I think actually you touched on this one thing I actually just remembered. The biggest difference I see with our generation than older generations, yes, a lot of them made so much money on their principal properties. Maybe even they bought
Yeah.
another, property to rent out. They made a ton of money in real estate. A lot of them didn't make a lot of money in the stock market because they put all of
Yes.
their money in real estate. It's really important to be diversified. So don't put all of your money in your house. Make sure that you're also investing. So, if you do want to leave, then not all of your money is coming from your house and you just have more options.
Yeah. I think it was the stock market also seemed more complicated back in the
Yeah.
day. And not to say
It
that's
was more
not.
complicated, to be fair. It wasn't as
Well,
easy as like opening an app and buying something like
exactly.
it is
There
now,
wasn't a
right?
Quest Trade or a Well Simpled making it with
Yeah.
zero trading, right?
Yeah.
I always look back and I always just think of the stock market as trading places, like the movie, and
Yeah.
just like
I
how
love that
complicated that
movie.
was. It just seems so complicated. It's like, yeah, I can't get in that. So I think that's what a lot of I mean, I don't want to
Mhm.
speak for everyone, but I feel like the older generation was like,
Real estate makes
I can
sense. It's a
make sense.
tangible thing that you're buying. Yeah.
And it's working. Like I'm making money every property I buy. I invest here. I wait a few years and I sell. And unfortunately, we aren't offered the same landscape, but we also have other technical innovations that make, self trading an
Yeah.
option, which we couldn't really do back in the day. So,
Yeah. And
no,
I guess the other thing too is it is so much easier to learn about this stuff. Like even just going back 10
yeah,
years ago. And I remember reading a personal finance book. It was specifically about like self-directed investing. And and I think even when I read it, it wasn't a brand new book. And I'm like, wow, this seems really complicated. I need $10,000 to even open up a discount brokerage account. I think that was maybe the minimum at the time. It seems so intimidating. Real estate made a lot more sense because you know
yeah,
exactly what you're getting. And but with that said, we're in now this wonderful world where there's all these free resources, informations, courses, calculators out there. There's no reason that, even though home buying and buying your first home especially can seem so intimidating, it's the best time to actually do it because you can actually learn everything. Like obviously working with a great mortgage professional is key, but also doing
yeah,
your own self research is super important. So you understand some of the terms that they're saying and it doesn't seem as scary.
definitely. Yeah. And I know we didn't clarify it earlier, but it's just kind of been in the back of my mind is that you mentioned posted rates. And I wanted to point out that when you're comparing rates online, just because what you see is posted may not be what you get. Like there can
Yeah,
be better rates that they don't even show you. And
there
that's why you
usually
need,
is. Yeah.
yeah, which why you need to talk to a mortgage professional to actually give you the
Exactly.
best rate for you. Because yeah, what you see advertised isn't generally what you're going to get.
No, yeah, it's not just like, oh, this is it, just like a savings account rate or
Yeah,
something like that.
yeah,
No, because it really depends on your own credit and all these other variables specific to you. So, yeah,
yeah,
that's why again it's important not to just assume that's what you're going to, or if you go to an institution and they just like, "Oh yeah, this is the rate you'll get, the posted rate."
yeah,
I'd say run away.
yeah.
Because that's not the best that they can do.
Compare those rates. Yeah,
Yeah.
take 10 minutes. Like shameless plug here. You can come to our website. You can get rates. You compare. At least you'll get a rough idea of what's in the market, and then you can go and have those conversations. But if you're just
100%.
taking, like you said, with your bank, yeah, they're going to tell you they're giving you the best rate, but that's just
Mhm.
because that's what they're going to tell you.
Yeah,
I am
exactly.
not with my bank. Like you said, you're not
Yeah.
with your bank, so yeah.
So
Sorry to
yeah,
them.
you know.
Yeah, they should have came with a better offer.
Exactly.
Yeah, great. Well, I appreciate all the information on the housing market. So we're going to transition on to that fun little section I was talking about you earlier, the rapid fire questions. So,
Okay.
and if I kind of said a few, so maybe you've kind of given it a thought, but I'm going to hit you with, about 10 rapid fire questions and just first thing that comes to mind.
Okay.
So the first thing is, what's in your wallet?
I mean, just a bunch of plastic. Like credit
We are,
cards, debit cards. I think I
nope.
don't even have any change anymore. I don't think I haven't handled cash in 2 years. So
Wow.
just a bunch of plastic. Yeah, nothing
I try,
exciting.
yeah, I try to avoid it too. But then every
Yeah,
once in a while, you get someplace where it's like cash only. You're like, I gotta go get cash. Like, and then what am I gonna do with this change that I'm never gonna use?
exactly.
Go to Tim Hortons, be like, can you just take all this? Like,
Yeah,
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 I don't need
exactly.
this. What's a book everyone should read?
Ooh. There's so many books. I always kind of my go-to because it was one of the books that kind of just made things click for me in terms of just personal finance and investing as Millionaire Teacher by Andrew Hallam, who is a Canadian. And it's just one of my favorite books and I love it. So I'd recommend that one.
We're actually supposed to be talking to him coming up soon. He has a new book coming out.
I know Balance. It's coming out
Yeah,
soon.
so
It's
we were going to
also a
talk.
good one. I read it. It's
Yeah,
great.
we're going to talk to him. I think in January about that. So
Nice.
yeah, shame. Look at that, just leading into the next one.
I know.
Foreshadowing. What was your first job, and what did you learn from it?
I say, okay, my real first job was like working at the Gap, but it was the season. It was like Christmas season
Yeah.
back when I was in high school. But I don't think that really counts. I think I just stopped showing up for shit. I hated it. But my real first, job was actually in fast food. I worked at A&W, and I worked there for like 2.5 years. And I actually learned a ton from that job. It was actually great. I mean, it was not a great job. You were like
Yeah.
greasy every day when you came home from work and you made minimum wage. Actually, I was earning at the time, BC had a thing where you had to work 500 hours before you can get minimum wage. I was earning below minimum wage, but I learned a lot
Wow.
of great things on how to be a great multitasker, how to deal with things under pressure, how to deal with very rude customers. I learned so much. I worked in customer service like from high school all throughout university, and I actually learned so much from that.
Oh, that's great. There's always something to take away from your first job, especially if
Oh
it
yeah.
teaches you a work ethic at least,
Yes,
and how to
it
like
really is.
manage
Yeah, it's not an easy job actually. It's very like
and
fast paced and yeah.
getting money. You may not know how to manage it very well, but it's the first time you've ever handled money that
Yeah, I got
wasn't an
really good at doing
allowance.
the cashier stuff. Oh yeah, I actually
Yeah.
like doing the cashier. It was actually kind of fun.
You know what? I did not enjoy my cashier job, but I mean,
Mhm.
it did teach me to count money really fast.
I say that the second job I had after that, which was now this just showing my age, and it was like my all time I think favorite job I've ever had was working at Blockbuster. I worked at
That would
Blockbuster
be
for like
awesome.
3 years,
I'm
and
jealous.
then it literally I stopped working there because it closed down.
Oh no! Did you watch the Netflix documentary over
Not yet,
Oh, you
not
have
yet,
to.
but I
The last,
will.
yeah, the last Blockbuster is it good?
Ugh,
It'll bring back those nostalgic
I
feels.
know it was a great time in my life working there.
Maybe you'll have to do one of you when you go out the West Coast. It still exists out like in Oregon or something like that. The
Oh
last
yeah,
Blockbuster.
maybe
Yeah.
we'll check it out.
Um, I'm sure you would definitely have a strong answer for this one. What is a commonly held belief about personal finance that you passionately disagree with?
Mm. Oh, there's so many.
I was gonna say, I'm like, probably not just
There's so
one.
many. I'd say one thing that really affected me in my 20s that I'm trying to now tell people a
Yeah,
different situation is how basically basically debt is bad. Let's just do that one. Debt is
yeah,
bad. If you have debt, you are a bad person that you need to not have any fun until it's all paid off. Like there was I think it was really just like in the early 2000s and mid 2000s debt was just like the biggest enemy and it's so ridiculous because a lot of the advice was don't start saving money or there's still some advice floating around like just save $1,000 for your emergency fund and then just focus on debt which is like what's $1,000 going to do like that's not enough to even pay rent
yeah.
but like it just the advice was like yeah pay down all of your debt and then you can focus on like investing but I feel like that's just like the worst advice, especially in this environment. If you have low interest debts, like a student loan and stuff, oh my gosh, don't wait to pay that off until you start investing. Start investing as soon as you can. That's one of the things my biggest regret is not like really understanding that and starting investing sooner.
I agree. I wish I was a little bit smarter in my younger days and not wasting all that money on needless items.
I know. Me too.
uh, I feel like almost this could be like what you just said, but if you had one tweet everyone in the world should read, what would it say?
I'm not good at tweeting. I'll tell you that. I'm not a good tweeter. But it would probably be something like money shouldn't make you feel bad. It should make you feel good. Because
Yep.
again, like when I started my personal finance blog, a lot of the advice or the money experts out there, they were very kind of like fire and brimstone about things, very much the you're not doing this, it's your fault, etc. And that really
Hmm.
kind of affects you. And I feel
Yeah.
like now a lot of the influencers are kind of flipping that to be like, no, you should feel good. Because the whole kind of making you feel bad about your financial situation, that's not a motivator for you to fix things. That's just going to
No.
make you feel bad and just like give up. A better way to think about it is money is a tool that you could utilize however you want, and it actually can be a great tool for good to lead a better life. And so really try to think about it in more of a positive way and see what it can actually do instead of what you're not doing.
I completely agree. This one's harder to answer maybe for some people, but do you have a number like or a timeline? What is your you know Jessica Moorhouse, I'm going to retire in Costa Rica number or walk away date if in mind?
Here's the thing I tell everybody, because I've interviewed a lot of people in the fire community on my show over the years, and I have no desire to retire early. And I think the reason is I finally figured out in my 30s what I want to do, what makes me excited. And it nerdily enough is personal finance and then educating people about money. It just gives me so much joy to teach people about this. So I, honestly have no plans to retire early. I guess, everyone has like a financial independence number, but for me, I keep on moving that goalpost. So I'm cool if I like literally work, my job that I've created until I'm 65 and then maybe settle down a little bit. But I know that's not really a good answer, but yeah, even
Oh,
with my husband, he works in music. He never thought he'd be able to do what he does for a living. And so it's always been his dream since high school. So I'm like, yeah, we're good. Like, I don't actually ever want to stop working. Because for me, what financial independence really means is like finding something that you love to do every single
yeah,
day. And that's what I
yeah.
get to do now. So I don't really have,
If you love what you do, then yeah, it makes
I'm
it
kind
easier
of
to get up
like,
in
I
the
feel like I
morning.
won the lottery. I'm doing what I love. Like, how cool is that?
No, that's great. And like you said, I'm gonna bring it back to what you said earlier, not to get too off topic. Had you, I think you said, had you gotten the market earlier,
Hmm.
you might have felt more committed to that 9 to 5 corporate job,
Yeah,
and you might not have been where you are now. So by
exactly.
taking your time and finding your way, you're actually on a
Yeah.
path that's much more enjoyable. And now you've figured out your housing, and now
Yeah.
like you said, you may never retire.
Yeah. Yeah.
Whereas if you're in that
Exactly.
9 to 5 corporate job, you would have been like, I want to retire tomorrow.
Well, yeah. I mean, almost everyone in the fire community, they're not self-employed starting out,
Yeah,
right? Like
exactly.
they're working jobs that they hate, and they just
Yeah,
want, a huge financial cushion to give them that comfort to leave. But for me, I'm like, well, I just left. I just quit that job I hated and then started doing the thing that I wanted to do. And although there's obviously risks involved, and thank God, knock on wood, things are working out, you don't have to wait until you have $1 million in the bank.
for sure, definitely. What do you want to be known for when you die? Loaded question.
Ooh, that's a good question. I hope people know me for being, kind, helpful, and really like, I know this sounds so cheesy, but the reason I'm so passionate about what I do is because I really do feel like it is like kind of my purpose, like why I'm here
Yeah,
on earth. And I want to really just like, yeah, focus on helping others so they feel more in control of their lives, by taking control of their finances. So I hope people, yeah, kind of, remember me as someone who was kind, friendly, and really just want to help people.
it makes complete sense, and I appreciate, and it's been a great, friendly conversation here. And the
Okay.
last thing is more about like you've imparted a lot of knowledge. You've kind of alluded to a bunch of different stories that I feel like are probably have been explained in greater detail in other mediums. So where can people find out more about your journey and your advice?
Well, you can find more about me on my website, jessicamoorhouse.com. I also have a podcast on personal finance called the More Money Podcast. It has like over 300 episodes. So you can go down the archives and see where we started and where we ended up. Also have a YouTube channel under my name, Jessica Moorhouse. And you can, of course, follow me on Instagram at Jessica I. Moorhouse.
Great. Well, I recommend it. I'm gonna have to definitely check out some more of these stories myself. But
Mhm.
no, I really appreciate your time. It was great chatting with you today, Jessica. And yeah, I hope this information can help all our listeners out there navigate the market better. It's not easy, but like you said, there's no right time to get in. You just kind of have to make that smart financial decision.
Yeah, absolutely. Well, thank you so much for having me on the show.
Thank you for listening. Thank you to Beat Chemist for providing us with our music. Find him on SoundCloud. I want to sincerely thank you the listener, for taking the time out of your own day and investing it in yourself to get smarter about money. Head over to Ratehub.ca to learn more about making smarter financial decisions. If you want to thank us, please leave a review on Apple Podcasts or follow us on Spotify. Thank you for listening. Let's help Canadians choose better with their finances.
And now, fine.
The views expressed by guests are their own, and their appearance on the program is not implying endorsement of them or any entity or their owners. Views and opinions expressed by Ratehub employees are those of the employees and do not necessarily reflect the views of Ratehub Inc. or any of its sponsors or officials. This is for general use, not certified or licensed advisors.
Yeah, we just don't want to get sued.